The need for financial education to improve our relationship with money and ultimately our financial wellness is well publicised. The government recognise this, the financial services industry recognise it, and so do employers, with financial education consistently reported as the fastest growing employee benefit. If we were to describe financial wellness as a problem, the problem is even more acute for women. There are many reasons for this, which we'll be exploring today. My name's Tim Perkins. I'm co-founder and director at Nudge. Been working in employee benefits for many years now, and the last 4 or 5 specifically in the financial wellness space. Delighted to be joined today by Michelle. Hi, Michelle.
Hello.
If you could give us a quick overview of yourself, that'd be great.
Sure. So I'm Michelle Highman. I'm the Chief Executive of the Money Charity. Been at the Money Charity for 6.5 years. Before that, I was at the Money Advice Service briefly and at the Financial Services Authority for 14 years, and the last sort of 5 or 6 years in their financial capability space. So I've worked in the financial capability sector for about 10 to 12 years. I'm also a trustee of the charity Gamble Aware, and I'm a member of the New Payment Systems Operators End User Advisory Council, which is quite a mouthful, and helps them make sure that the payment system operates in the best way for consumers.
So very well qualified for today's session. So delighted that you could join us. I guess the third party in this session is Nudgeonomics. So for those of you who have joined our webinars before, you'll know that often we report a lot of data from our service as well, and that's presented under the Nudgeonomics branding. So there'll be a couple of examples of that throughout. This session we're going to aim for 20 minutes. If you've got any questions, there's a questions tab in your portal, so just pop those through and we'll do our best to respond to those as quickly as possible. And I know that we have a loyal following, so lots of people will know who we are, but I will just give a quick overview in a moment. But to start with, Michelle, could you just tell us a bit about the Money Charity, the work you do?
Sure. So we see ourselves as the UK's financial capability charity. We're the only sort of charitable organisation that provides financial capability products and services for everybody. So that means all age ranges and all types of people. So we work in schools and colleges with younger people, so 11 to 19-year-olds, delivering financial education workshops. Right. We also have a student money manual, which goes out to those thinking about university and just at university. We have teacher resource packs, which help teachers themselves deliver financial education in schools. And then in the adult space, we have lots of tailored opportunities to work with different types of adults. We work through employers ourselves, so delivering financial education in the workplace, but also having sessions with all sorts of third sector and voluntary groups, where pretty much wherever adults all come together to get them to talk about and think about money, often for the first time in their lives.
Okay, brilliant. Yeah, and I know we've got some partnership bits that we've done with you, so there's certainly a nice link between our organisations. In terms of what we do, I guess the reason that our business exists is the fact that the world of personal finance is complicated. So I read the other day apparently there's £9 billion of unused allowances. So I guess in the employee benefit space, we are a workplace financial education provider. In the employee benefit space, we're known as a financial education provider. The result of our service is delivering financial wellness. But what we've learned over the years is financial wellness requires too much explanation when it comes to employees, and financial education sounds a bit dull.
None of the labels really work, do they?
No, Why the Name is a Shame was a blog I saw on this subject previously. So from that perspective, the way that we position ourselves with employees is about making money simpler. So in terms of the content today, women and financial wellness, I think the trigger, we've done a few of these webinars on, I guess, under the diversity umbrella, and the trigger for this one was the gender pay gap reporting. So in case you'd missed it, which I very much doubt anybody had, there was a deadline on the 6th of April that required employers with over 250 people to publish information about their gender pay gap. And for absolute clarity, gender pay gap doesn't tell us whether women are paying less than men for the same work. As it happens, that's been against the law as a result of the Equal Pay Act in 1970. It's about showing different working patterns. It's about showing seniority, and how the makeup of different organisations splits between men and women. Couple of headline stats: over three quarters of organisations paying men more than women, and interesting, there was no one sector that was paying women more. So yeah, there was a lot of news items about it, lots of different opinions. Michelle, what were your views on the gender pay gap?
Well, it's pretty shocking that we're still in this situation, and that, as you say, there's not even a single sector that we can point at where we've got equality. So that's a shame. I think it obviously is a blunt instrument, but in this case it's a really useful blunt instrument because it points that out to us. Being financially capable can help you make the most of what you've got, but it can't make up for the lack of salary fundamentally. It can help, maybe it can help you eke it out, it can help you make the most of it, but ultimately, if you're not being paid enough, then you're not being paid enough, and there's no real getting away from that. So it's helpful, I think, to shine a light on the situation and hopefully to continue to promote change.
Yeah, and are there any kind of do you tend to see differences in gender through your work at the money charity?
So one of the things that we focus heavily on at the money charity is getting people to talk about money.
Yeah.
So money is still one of the biggest taboos in our society, and we'll talk about anything else really. We'll talk about our health, even our sex lives, anything. But money is still something that we feel shy about talking about.
Yeah.
And so in our workshops, we try very hard to get people to think about money and talk about it and think about how they interact with it and how perhaps their partners and their families interact with money. And I think women generally are probably good at some aspects of this, so they often find it easier to admit that they don't understand something.
Mm-hmm.
They often find it easier to ask for help, and so both those things are really positive. But as we've sort of touched upon, they're probably not as good at negotiating pay in the first place and asking for pay salary rises as they go through. So
yeah,
clearly that then impacts.
Yeah, it's a complicated matter, isn't it? Lots of moving parts. Now, I think it's fair to say that the gender pay gap could be a webinar in its own right. So we'll park that for now. But I think, and as you alluded to, pay is only part of the story impacting financial wellness. There's another aspect is the benefit gap, and that might be as a direct link because of the pay, or it may be other circumstances. So, very simply, if you're being paid less, you're going to get less benefit. So something like life assurance, which I'm sure most of our listeners provide, is typically based on a multiple of salary. If you're paid less, then you're going to get a different level of cover there. Pension contributions obviously work normally on a link to salary. Bonuses, even things like flexible benefits, where if somebody's selling holiday, if they're on a less salary, that's going to return less pay to them. So there's a big knock-on effect, I guess, of that lower pay. And we've also seen difference in the way that women are interacting with their benefits. So I saw some research a few weeks ago from Now Pensions, who were quoting that the 22 to 29-year-olds, women versus men, the opt-out rate from auto-enrollment from women was 5% versus 3% for men. So there's a real compound impact here, all of these factors coming together. And on the subject of pensions, lower contributions coupled with the fact of career breaks and women more likely to be working part-time has a huge impact, with, I think it was the CII, Chartered Insurance Institute, estimating that the average women's pension at 60 to 64 was a quarter of that of a man's pension. So Michelle, going back to think about your work, particularly perhaps your days at the FCA, do you think the benefit gap is a widely recognised problem, or do you think we're all still focused on the pay gap?
Yes and no, I would say. So I think over the years we've come to understand the impact lower pay and career breaks have on retirement provision. And I think there has been, whilst we haven't necessarily come up with the answer to that, we have at least acknowledged it, that it exists. But I would agree that less focus has been given to the impact on working benefits. So as you say, death in service benefits or flexible benefits. And it's not something that I've that I've heard much discussion about, and I think you're right, it is important. The auto-enrollment statistics are also worrying, and it would be interesting to understand a bit more about that and try and unpick why that is. Both genders, the opt-out rate is low, and that's brilliant, but actually from such a low base, 5% is almost double 3%, so it's a significant difference. And pure speculation, but you might speculate that women are putting the sort of day-to-day need of paying for their homes and their children ahead of their longer term provision potentially. So something I think that it would be important to try and understand a bit more about.
Absolutely. So I guess they're both contributing factors, that the pay gap, the benefits gap. Thinking about then financial wellness, I mean, what a brilliant phrase. Sounds amazing. Sounds very positive, financial wellness. But there are a lot of differences of, I guess, definition of what that means. So in your world, Michelle, what is financial wellness?
So I would say being financially well means that your financial situation is healthy and that it contributes to your mental and physical well-being. That doesn't have to mean that you have lots of money, but that you stay on top of what you have and that you make the most of what you have. So ideally, you have a plan for the future, you save, you use credit well, and I guess crucially, you don't worry about money and debt, and that you don't lose sleep over paying your debts, paying your bills. And obviously all of that impacts on the individual, but it also impacts on the family, and I guess crucially to this conversation, also on the employer through absenteeism and lack of concentration at work. If somebody is stressed and unable to concentrate, then that clearly has an impact on them.
Yeah, absolutely. And so I think it's great to hear your definition there from our perspective. So we use definition from the Money Advice Service, which you may have been instrumental in creating, Michelle. And we know from the CIPD's publication last year that there's an adaptation of that. So in our world, financial wellness is that state of emotional and physical well-being produced by a set of conditions and capabilities. So it's about, I guess, helping. It's not about giving people an immediate leg up. It's about a more long-term, sustainable, helping people change their relationship and their attitude and their behaviour with money. So I think some of the factors fueling the gap and fueling a woman's financial wellness as opposed to a man. A big one here, life expectancy. So looking some stats in preparation for this. So in 2014 to 2016, a man in the UK age 65 had an average 18 and a half years of life remaining, whereas for a woman it was 20.9%. So that's 13% more. So thinking about pension, not only is that more time that needs to be covered, 13% more time, but they're working less in order to fund that. So there's a bit of a perfect storm there. Yeah,
and the sort of potential risk of the pensions choice agenda means that that longer length of time to live, the burden might be carried by the individual rather than by having, if you purchase an annuity, then obviously you've got that covered. Okay, you might not get the best rates in the world, but you do know that you've got income every year until you die. Whereas if you take some of the other options available to you, then that burden is on you to make sure you manage your money throughout retirement to ensure that you don't run out of money before you do.
I mean, it's a big debate there, isn't there, about how equipped people are for pension freedoms. There's all sorts of reasons why it's a good idea, but you need to make sure people are equipped. Again, that's probably a webinar in its own right. I think the other factor that has a big influence on that wellness, particularly with a lens on women here, is around career breaks. So women are more likely to stop starts. And there was, I'm not sure if you saw it, but there was some news a couple of weeks ago from Joe Swinson, the MP, urging large employers, and by that over 250 employees, which I guess isn't a coincidence that matches with the gender pay gap, urging them to publish their parental leave policies on their websites. The idea being that that'll tackle gender equality. Back to your point about taboo, it puts it in the open. People don't have to ask something that they're nervous about asking.
It's a difficult thing, difficult question to ask for a woman, but for a man too. To when you're looking for employment, asking what's your maternity pay, because it does sort of potentially suggest you're about to go and get pregnant, and unfortunately for some people that's not something that they wish to talk about up front. So this is helpful. Absolutely.
And I think there was a couple of striking examples that we picked up in the preparation for this. So one was Netflix. They have one of the most generous parental leave policies in the world, where parents are allowed to take off as much time as they want during the first year. So and that covers birth or adoption. And then I know closer to home, I think Aviva, parents are eligible for the same amount of time off work, which is 12 months with 26 weeks at full pay, regardless of their sexual orientation, their gender, or whether indeed it's adopted or surrogate. And there was a nice quote there from the head of people: it's time to create a level playing field for everyone. So I think the more progressive employers seem to be recognising this.
And I think it's good to see progress in this space, particularly where companies are providing time off with full pay. I think otherwise the danger is that although the potential exists for shared parental leave, often the man's wages is the more significant one, and therefore often it's the one that the family can least do without. And therefore, if we're asking people to take time off and not pay them, then often they just won't do it. And so at least this allows people choice and access.
Yeah, and I think I read the other day that only 2% of people had taken up their opportunity to use shared parental leave, and I think a lot of that came down to misunderstanding. So there's clearly a lot of work to be done there. Women living longer, working less, means that one of the ways to potentially solve that problem is to take more risk, which is potentially a controversial statement, but that does open up a whole discussion around the differences between men and women in terms of knowledge and their confidence and their attitude to risk. And they're all obviously very intrinsically linked. So we saw some research from the OECD, the Organization for Economic Cooperation and Development, that recognised that there were gender differences in financial knowledge. So quite a big difference there between men and women. Don't know your views on that, Michelle.
Well, I think it's an interesting one, isn't it? I think knowledge, and as you said, knowledge and confidence are very linked, and it would be helpful to understand more about whether women's knowledge is actually lower or whether their confidence in answering the questions is lower. I know a similar, I don't know if it was the same survey or not, but an OECD survey found that women are much more likely to answer "I don't know" to a survey testing their financial capability than men. So partly knowledge, but partly their own confidence in their own abilities. And a 2012 YouGov survey asked them to rate themselves based on knowledge of financial products and services, and 72% of men, but only 58% of women claimed a very good understanding. So be interesting to unpick that a bit more.
Definitely. I think as a extension to that, so as part of our nudgeonomics, we've done some analysis with a particular client of ours, and we found that thinking about pensions and the difference between people going with the default option versus self-selecting, which I think comes down to both knowledge and confidence and attitude to risk, women were 30% less likely to self-select rather than going with a default fund. So hard facts there. And then we saw some research from Fidelity recently, said that women are half as likely to use a stocks and shares ISA instead of a cash ISA, and the compound impact there is massive. There's all sorts of calculators on the internet where just see over 30 years, by getting slightly less performance, it has a massive impact in the future.
I mean, I think that's true, and I think it might be overconfidence on a male's part compared to a female, but if the outcome is a positive one in that the product performs better, then that's something we should be encouraging for everybody.
Yeah, absolutely. So thinking then about the role of employer. So our world is predominantly the workplace, but your service covers both workplace and non-workplace, Michelle. What do you think can be done? Where do you see the solutions?
So I think particularly when we're thinking about gender, sometimes it's the offering outside of the workplace that can really focus in on that. I think it's harder for an employer to focus in on just its female staff, for example. But we at the Money Charity, we deliver workshops in all sorts of different charitable and third sector organisations. So for example, we might deliver one of our workshops in a women's refugee group or a women's domestic abuse group, or it could just be the WI or a group of young mothers. We work with all sorts of people of any demographic, and we can tailor our content to reflect their circumstances and the participants. And delivery to charitable organisations is normally free. So if any of your listeners do know of any charitable organisations that might like our support, then please do get in touch. I've also worked, as I said in the past, at the FSA, and we ran a very successful programme delivering support through midwives. So every mother and pregnant woman in the country was provided with what's called the Parent's Guide to Money.
What brilliant idea.
Yeah, directly through their midwife with a part of their one-to-one support.
Yeah.
And I think so there are some moments in life, and pregnancy is obviously one of them, which only apply to women.
Yeah.
But there are also stages in life when I think both sexes are prepared to admit that they don't understand and that they need to seek support. And having a child is one of those moments, because you do realise your life is going to change forever, and therefore you are probably more willing to say, I need some help here. So I think employers could tap into that. They could provide financial education or some kind of support for pregnant employees or for those returning from maternity leave, and to their partners too. It doesn't have to just be the women. The men too will all be more open-minded at that point.
Yeah.
And so I think there's a short window when prospective parents would probably genuinely welcome support from the employer. And it also benefits the employer too, because they can make sure that the new parents understand all the benefits available to them. Some of them, the childcare options or whatever, might not have been of any interest previously and suddenly are. So good opportunity to reinforce them too.
Yeah, and we know that's an ongoing challenge for employers, make sure people understand what's being made available for them. So lots of information and ideas coming out from that. I think the takeaway there was that employers need to recognise that women are different, both in terms of the interest, perhaps the life events, the risks, the knowledge, the confidence. In terms of the way that we deliver financial education at Nudge, we have this underpin of these 24 areas of interest, which you can see on screen there. So very diverse set, but it covers every nook and cranny. So bit of interactivity for you, Michelle. What would of those, where do you think we would see key differences or spike in interest from women as opposed to men?
I think generally they would probably be a little bit less interested, to be honest. I mean, they've got perhaps got busy lives and busy, as I say, looking after, juggling all the balls. So potentially slightly less interested, and I suspect that the OECD data again backs that up. So, and that's not just me speculating. And also I suspect they would be a bit put off by jargon. Not a fan of jargon.
Well, let's have a look. So what we have here is these charts show where we have the biggest positive difference in interest of women as opposed to men, and vice versa. So we can see those interests where women are more interested in this across our whole client base: everyday finances, in the home, holidays and travel and relationships. And then from a men's perspective, where they have much more interest than women: life after work, vehicles, pensions, investing and tax.
Wow,
so
that's quite
striking, isn't
stark, isn't it?
Yeah. So it'd be interesting to see what for individual clients what their makeup is. You talked there about jargon. And we saw some research from HSBC earlier this year that said women were a lot more likely to be put off by jargon than men were. So 35% of women as opposed to 26% of men. We've also seen that from our own research, the Nudgeonomics, women are a lot more conscientious. So if we're sending out a suite of nudges, men are a lot more impulsive. You know, people are opening and interacting their financial education straight away, whereas women tend to wait until lunchtime or after work, which I think is interesting. So I don't know any views you've got on that at all, Michelle, those couple of points.
Well, yeah, I mean, the jargon thing doesn't surprise me at all. The being more conscientious is interesting. It's not something that we would have would know either way, really. But I guess it does make sense that a woman would maybe reflect on something, put it aside until they had a moment to consider it properly.
Yeah, a bit more reflective. Yeah. Okay, so I guess to summarize then, so individuals, the UK and employers have all got a lot to gain from financial education, and women have even more to gain. I saw a report in Employee Benefits a couple of weeks ago that was quoting some research from McKinsey that was saying that by bridging the UK gender pay gap, the UK's got the potential to create an extra £150 billion on top up business as usual GDP forecast. So probably need to read that a couple of times to understand what it means, but it's positive. And so, yeah, I think it's a great next step from gender pay. You know, what happens now? We know there's a gap. What's the next step? I think from an employer's perspective, I say there's some really good inspiration from the likes of Netflix and Aviva in terms of promoting that shared parental leave and flexible work, and some works from the House of Commons as well around the Women and Equalities Commission found that less than 10% of, in inverted commas, quality job vacancies, whether those were defined as earning over £20,000 a year, were open to flexibility. So if a woman needs more flexibility, there's going to be a clash there. So kind of parting summary from you, Michelle?
I think, I guess, obviously, I would say this, wouldn't I, as a leading a financial capability charity, but to me, financial capability is vital for everybody. But I think, as we've discussed today, it's particularly vital for women for all the reasons that we've talked about. I think one of my favourite statistics from the work that I did at the FSA was a report that we helped commission, which looked at the impact of being financially capable, and actually it's the impact on your well-being is more positive to be financially capable than it is to have £1,000 pay rise. Wow. Which is quite an impressive stat. And again, from an employer's perspective, you may not be able to give all your staff £1,000 pay rise every year, but you can help them become more financially capable. So something I think really important to sort of end on, and have been a fascinating conversation. We and you obviously both do a lot of good work with employers, so we'd really urge those listening to think about it, make sure they are sort of top of the game in this space, and we would be happy to help, and as I'm sure you would.
Yeah, brilliant. No, I've really enjoyed it. So thank you very much for joining us, Michelle. It's been fascinating to explore such a topic. I think the need has never been greater for financial education, and it's even more acute for women. So hopefully we've raised awareness and given you a few ideas for addressing the financial wellness of women in your organisation. Slides will follow, and apologies we overran a bit, but I'm sure you agree it was worth it. Many thanks.